Happy Wednesday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Wednesday, November 22nd, 2023. As always, we'll start with our executive summary from today's leadoff morning note. As always, if you like the analysis supporting these conclusions or what to actually do about them in your portfolio, you need to be a client of 42 Macro. So number one, yesterday's Fed minutes indicated consensus around the plan to proceed carefully on future interest rate decisions. In our view, that is Fed speak for we're probably done hiking rates, but we must retain optionality for credibility's sake, given our historic policy gaffes throughout 2020 and 2021. The market has interpreted the recent barrage of Fed speak and economic data in a rather dovish manner, and we agree with that view. Number two, amid our prescient call for a pain trade higher in stocks and bonds at the beginning of this month, we communicated that the upside surprise in non-farm productivity growth and downside surprise in net marketable borrowing by the Treasury Department would reignite interest in soft landing trades amongst investors. One such soft landing trade is selling the US dollar, which has declined nearly 3% month to date in DXY terms. That's a lot of ground to cover in such a short period of time, so investors should expect some retracement in the days and weeks ahead. But have we seen peak dollar is a question we would be remiss not to explore as investors. All told, number three, all told, we are by no means making a dollar bear call here. That would be imprudent to do in the current deflation top-down market regime. We are, however, in our research today, and definitely check out the note. I thought this was really good research today. I think it's really good research every day, but certainly today, if you care about the currency market and its implications for the rest of the broader asset markets. We are, however, charting a credible path to a potential phase transition to a Goldilocks top-down market regime in the weeks and months ahead that would be reflexively driven by a falling US dollar and rising global liquidity. Refer to yesterday's leadoff morning note for more details regarding the latter dynamic. Transitioning here to my 42 macro dashboard, we'll start with our daily rundown of macro market indicators vis-a-vis our Longbow signals, our signals from our friends over at Longbow. So not much going on in terms of actionable trading ranges, with the exception of base metals. Base metals are currently oversold here, so definitely be aware of that. In terms of a question from the community here, in terms of our 42 macro rare community, I thought there was a great question here about our walkthrough video. So we have a lot of educational. Let me take a step back. 42 macro is at its core a top flight institutional macro risk management service. I cut my teeth on global Wall Street and now continue obviously to serve those types of clients: hedge fund, mutual fund, pension fund type investors, corporate treasurers, etc. But we also obviously offer retail investment advisory services to retail investors as well. And so what we're trying to do is level that playing field, that informational edge that institutional investors have historically had in constantly taking money from retail investors, and we're trying to level that playing field so that everyone in the 42 macro community has a great opportunity to achieve their investment objectives. And so one of the ways in which we do that, obviously, is to continue to supply the market, or at least our current subscribers, with top flight institutional insights. But in order to get our retail subscribers up to speed and up their own respective learning curves, we produce a lot of educational content as well, both outside and beyond and behind our paywall. One of the things that's behind our paywall are our product walkthrough videos, where we explain all the different components of our process. And so we have that's our product walkthrough videos, and I want to say they're a little bit outdated relative to some of the process improvements that we've implemented since those product walkthrough videos were introduced. I want to say, just kind of rattling off the top of my head, just in the year to date alone, we've introduced our systematic 60-30-10 KISS portfolio construction process. That's 60% SPY, 30% ag, a core U.S. aggregate fixed income, and 10% Bitcoin. And we use our top-down and bottom-up risk management overlay signals to sort of manage that from a risk management standpoint. That's demonstrably outperforming 60-40 on any relevant duration. So that's one. We introduced our macro weather model that is core to that top-down risk management overlay in that KISS portfolio construction process. We introduced our deep dive work on global liquidity in the context of some of the in the context of our global liquidity monitor and our global liquidity proxy, which recently we talked about yesterday, inflected to a positive trend. What else have we done this year? We've done a lot of stuff in the last year or two in terms of beefing up our research process, adding real deep dive on positioning in terms of our positioning model, beefing that up, et cetera, et cetera. So there's a lot of stuff that you're seeing now in 42 macro research that may not have been covered in that product walkthrough video here. So our friend here and I won't mention your name just out of for anonymity's sake, but definitely go check out our October 21st around the horn. I think it was over an hour long. We spent, kind of we deliberately spent a deep dive, did a deep dive on every single component of our Bayesian research process that we execute 6 days a week, sometimes seven when we have our macro scouting report out. So you see the same exact research from us day after day after day after day after day after day. If you're someone who likes bear porn or macro tourism, we are not the research provider for you. But if you're someone who actually likes to make and save money in financial markets, definitely come check us out if you're not already a current subscriber. So with that, we'll wrap it up. We just want to say we appreciate everyone. Thank you for joining us. Thank you for tuning in to hear me ramble every morning. And more importantly, go enjoy yourselves a happy Thanksgiving. I don't care if you're in Argentina or Australia. Tomorrow is arguably the best day of the year for a variety of reasons, not the least of which you get to eat eat as much great food as awesome as you possibly can. You get to hang out with family without all the stress of having to go buy Christmas presents and figure out what everybody wants. And there's a ton of football on TV, so I can't think of a better way. If I died, in my head, heaven is a repeat of Thanksgiving over and over and over again. So I just want to say happy Thanksgiving, happy holidays to everyone. Looking forward to helping you manage risk throughout the rest of 2023 and obviously into next year as well. So cheers. We'll catch you back here on Friday.